The day the dollar died, a ghost died in the financial world yesterday. There was no press briefing at the White House. No breaking news alert is scrolling across the bottom of CNN's screen. If you only read mainstream news, you probably didn't hear a word about it. They were too busy talking about possible interest rate cuts that might never happen or the latest political scandal to pay attention to anything else. But in the cold, quiet server rooms where the global central banking system works, someone flipped a digital switch that brought down an empire. The petrodollar, which has kept the U.S. economy strong for 50 years, paid for our budget deficits, and helped Americans live better, didn't just run out of time, it was replaced. There have been rumors for months that a secret deal between the U.S. and Saudi Arabia from 1974 is about to end. Fact-checkers have been working extra hard to convince you that this story is made up. They say that no formal treaty with a set end date was ever signed. And in a technical sense, they're not wrong, but in spirit, they're completely lying to you. There was never an official document signed on June 9, 1974 that said, oil transactions in dollars only. However, Treasury Secretary William Simon did make a deal with the Saudi royal family that was as solid as a rock. The deal was simple. The kingdom would get military protection and high-tech weapons from the United States. In return, Saudi Arabia would sell every barrel of oil for U.S. dollars and, most importantly, put all of those extra dollars back into U.S. Treasury bonds. People started calling this the petrodollar recycling loop. This was the engine that kept the American empire going. It let us print as much money as we wanted without causing inflation because everyone in the world had to hold our debt to buy energy. That deal you made with a handshake is now in pieces. The whole fake news argument about expiration dates was just the public slowly coming to terms with something that powerful people have known for months. The Saudis have made it official that they are on the other side. It's not a torn-up treaty that proves the case. It's a new digital partnership. Saudi Arabia is now fully a part of Project Enbridge as of yesterday. If you don't know what it is, Project Enbridge sounds like just another boring infrastructure project. The truth? It's like the Manhattan Project for the world of finance. The Bank for International Settlements, this innovation hub, worked with central banks from China, Hong Kong, Thailand, and the UAE to make Enbridge, which is a multi-central bank digital currency, CBDC, platform. It's a digital ledger that lets central banks settle international trade deals right away, without using the U.S. dollar or the U.S.-controlled SWIFT messaging network. For the last 50 years, Saudi Arabia had to use a U.S. correspondent bank in New York to sell oil to China. The buyer from China would first change yuan into dollars. The U.S. government could watch, track, and even freeze those dollars as they move through the U.S. banking system. In the end, they would end up in the Saudi bank account. This setup gave Washington the most control over the situation. We could punish anyone, anywhere on Earth, just by cutting off their access to the dollar payment rails. Project Enbridge completely gets rid of that bottleneck. The People's Bank of China issues digital yuan on this new platform, and the Saudi Central Bank issues digital rial. They use blockchain technology to carry out trades. No need for a correspondent bank. There is no clearinghouse in New York, no need for U.S. dollars, and most importantly, no spying by the U.S. government. Saudi Arabia didn't just sign up for a test pilot program when they joined Enbridge as a full member. They built the highway that goes around the U.S. Treasury completely. For the U.S. bond market, the results of this change are completely scary. The U.S. government has been able to run $2 trillion budget deficits because there has always been a structural, guaranteed demand for U.S. debt. To keep trade running smoothly, central banks all over the world had to hold treasury bonds. If global trade moves to a peer-to-peer digital ledger that uses local currencies, like the petroyuan or petroreal, that structural demand will disappear completely. We can already see the math falling apart. Saudi Arabia's ownership of U.S. treasuries is at its lowest level in years. They are no longer using their extra oil to pay off American debt. Instead, they're putting it into infrastructure projects at home, like Vision 2030, building up their gold reserves, and investing more and more in Chinese assets. The customer, China, has successfully gotten the merchant, Saudi Arabia, to stop using the credit card company, the USA. Why would they keep paying Washington transaction fees, both financial and political? This alliance wasn't just based on money, it was also based on the dollar being used as a weapon. When the U.S. froze Russia's $300 billion in central bank reserves in 2022, every country in the global south was scared. The Saudis saw that and thought, our money in New York isn't safe. If we ever disagree with how the U.S. handles foreign affairs, they can just take our money. That realization completely broke the trust that William Simon had carefully built up in 1974. Project Bridge is the technological answer to that political fear. It can't be punished in any way. The fact that the Bank for International Settlements, which is the central bank for all central banks, helped build it is the most ironic thing of all. The West made the very thing that is now being used to break up its own power in the world. The BIS has tried to distance itself from the project lately because it realized it would be used by the BRICS countries, but the code has already been written. The genie is out of the bottle. The platform is fully functional, and with Saudi Arabia, the world's biggest oil exporter, now on board, it has the critical mass needed to break the dollar's hold on the global energy market. We can see the dollar's Napsterization happen in real time. Do you remember what Napster did to the music business? It didn't kill music itself. It ruined the way CDs were sold. The dollar is getting the same treatment from Enbridge. The dollar is like a CD, it's an old, bulky format that you have to buy. Enbridge is the streaming service that is quick, cheap, and direct. The U.S. government is acting just like record company executives did in the late 1990s. They are suing people and trying to ban the technology altogether, refusing to admit that the basic business model has changed forever. But you can't stop a platform that is run by independent countries. You can't punish China and Saudi Arabia just because they trade with each other using their own money. You could technically try, but that would start a real hot war, not just a trade war. The mainstream media won't tell you this because it's too hard and scary to understand. They'll say the dollar is doing well because it's getting stronger against the euro or the yen. That is the cleanest shirt in the dirty laundry argument. The dollar may be stronger than the euro, but it is losing value against real things like gold, oil, land, and Bitcoin. And now it's not working as well as it used to. Why do you need dollars at all if you don't need them to buy oil anymore? This is the Triffin dilemma coming apart in the opposite order. When demand for dollars abroad goes down, those dollars will come back home in large numbers. When trillions of dollars come back to the U.S. economy, we'll see an inflation supercycle that will make the 1970s seem like a nice day at the park. The petrodollar was more than just a trade deal. It was the dam that kept our own money from flooding us. Saudi Arabia and China blew up that dam with bombs yesterday. Right now, the change seems small. You will wake up tomorrow morning to find that gas prices have gone up by a factor of 2. But pay close attention to the term premium on long term. U.S. bonds, keep an eye on the price of gold as it breaks records in every currency. These are the first warning signs. The market knows that the last resort buyer of U.S. debt is no longer there. The Saudis have a new friend. This new partnership is based on cutting-edge technology and a shared desire to get away from Washington, D.C.'s control, which is different from the marriage arrangement of 1974. The time of too much privilege is over. The time of heavy burdens has just begun. If you want to know why the Petrodollar isn't just a crazy idea that people who hate America have, but a mathematical fact, you need to follow the real flow of oil. In 1974, the U.S. was the biggest buyer of oil in the world. We were the ones who bought it. The merchant was Saudi Arabia. The merchant had no problem accepting payment in the customer's currency. But the political situation in 2026 has changed a lot. The United States is a net energy exporter today. We are no longer OPEC's customers, we are now their competitors. China is now the biggest customer, buying more than 11 million barrels of oil every day. Saudi Arabia, the seller, and China, the buyer, doing business in the currency of a third party, the U.S. That is actively punishing both of them makes no sense at all. It adds exchange rate risk and political risk that neither side wants to deal with. This is why the death of the petrodollar isn't just one thing. It's a big change in the way the whole global supply chain works. The 20th century's petrodollar recycling system was very easy to understand. Saudi Arabia sold oil to countries in the West. People in the West paid with dollars. Saudi Arabia took those dollars and bought U.S. Treasury bonds, which directly paid for the U.S. military and budget deficits. The 21st century's new petroleum recycling loop is just as simple, but it doesn't include New York at all. China buys oil from Saudi Arabia. Through and bridge, China pays with digital yuan. Saudi Arabia buys Chinese infrastructure and technology with those yuan. Take a close look at the Saudi Vision 2030 plan. They're building huge, futuristic cities like Neom, The Line, and Red Sea resorts. Who is putting all the concrete down? Construction companies in China. Who is in charge of building the high-speed rail networks, railway in China? Who's putting in the 5G telecommunications backbone? Huawei. Who is building the solar energy farms? Chinese builders. The Saudis are selling their black gold for steel, glass, and high-tech goods. They're not putting their extra money into Western paper debt instruments. Instead, they're putting it into Eastern physical infrastructure and assets. The U.S. Treasury bond has been taken out of the whole loop. But most Western analysts miss an important piece of this puzzle. They say that the Saudis will never fully accept the yuan because they do untrust the Chinese Communist Party. They know that the yuan is being manipulated and that strict capital controls keep it in China. This is a real worry. The Saudi royal family isn't dumb. They don't want to trade one master, the dollar, for another master, the yuan, at all. This is exactly where the Shanghai Gold Exchange comes in. China fixed the main trust issue by connecting the petroyuan directly to gold. China started trading yuan-denominated oil futures, contracts in Shanghai in 2018. They made these contracts fully convertible into real gold through the Shanghai Gold Exchange and the Hong Kong Gold Exchange, which was very important. This set up the gas for gold system. If Saudi Arabia sells a lot of oil and gets a lot of yuan, but then decides they don't want to keep Chinese currency for a long time, they can turn those yuan into real gold bars right away and send them back to Riyadh. The yuan is now just a temporary token, like a digital coupon that lets the Saudis trade oil for gold without ever using the US dollar. This brings back a fake gold standard just for the energy market. It tells you exactly why central banks, with China and Saudi Arabia at the top, have been buying gold at a record-breaking rate for the past 36 months in a row. They are making the liquidity pool that this new non-dollar trade settlement system needs. It's not that the yuan will suddenly take over as the world's reserve currency that poses a real threat to the U.S. economy. That is very unlikely to happen anytime soon. The yuan isn't clear enough, and China's bond market isn't big enough to play that role. The real danger is that currencies will split up. To lose its dominance, the dollar doesn't need to be replaced by just one other currency. It just needs to die slowly. The dollar's network effect will be completely broken if oil trade moves to the yuan. India and Russia's trade moves to rupee-ruble exchanges, and Brazil and China's trade moves to local currency settlements. The dollar goes from being the world's operating system to just being the currency of the United States. This is very important because the dollar's exorbitant privilege depends entirely on how widely it is accepted. People hoarded dollars in huge amounts because the world needed them to trade. Right now, foreign central banks own about $7 trillion in U.S. Treasury securities. They keep these bonds as reserves to protect their own currencies and make it easier for trade between countries. But if they don't need dollars for trade anymore because they're using in bridge and petroyuan instead, they have no reason to keep $7 trillion of our debt. They will start selling more than they buy. This leads us to the Triffin dilemma working in the opposite direction. For a long time, the U.S. was able to send inflation to other countries. We printed dollars and sent them to other countries to buy cheap goods and oil. The dollars stayed in foreign central bank vaults. This kept inflation from getting out of control in the U.S. economy. We could enjoy both cheap imports and interest rates that were at their lowest point in history. But what will happen if the world starts to sell off those dollar reserves? Those dollars come rushing back home. Who buys a U.S. Treasury bond when Saudi Arabia sells it? The Federal Reserve is the only buyer left if China, Japan, and Saudi Arabia aren't buying. The Fed will have to print trillions of new dollars to pay off the debt that foreign holders are selling. This huge amount of new money, along with dollars coming back from abroad, will start a domestic inflation firestorm like we've never seen before. It makes the American standard of living have to be completely reevaluated. The Walmart economy, where we trade paper IOUs for cheap goods made in other countries, is coming to an end. Things that are brought in from other countries will cost a lot. Because there is no longer any foreign demand keeping our interest rates artificially low, the cost of borrowing mortgage, car loans, etc. will go up structurally. We are already seeing the geopolitical realignment that backs up this whole idea. Check out the diplomatic calendar from the last 3 years. When President Biden went to Saudi Arabia in 2022, he was met with a lukewarm, low-key welcome and a flat refusal to boost oil production. That awkward fist bump became a sign of how cold their relationship had become. Compare that to Xi Jinping's trip to Riyadh, Saudi Arabia. He was welcomed with a lavish royal ceremony, fighter jets painting the sky red and gold, and the signing of investment deals worth $30 billion. The visual symbolism was very clear and easy to understand. The Saudi royal family knows that the U.S. is a declining empire with a political system that is unvery stable and a domestic energy agenda, heavy focus on green energy. That threatens their survival. They know that China is a growing empire that needs a lot of oil and has a business-first, practical way of thinking. They are being smart stewards of the future of their kingdom. They're spreading out their exposure. They're not going to get rid of the dollar right away because they're scared. That would hurt their own huge dollar holdings and make their currency peg to the dollar less stable. But they are slowly and carefully lowering their risk. They're slowly selling treasury bonds, quietly buying gold, and building the digital infrastructure they need so that when the time comes to fully decouple, they can do it with the flip of a switch. The 1974 deal with Saudi Arabia was a great short-term fix for a long-term problem. It gave the U.S. 50 years of borrowed time. We used that time to eat too much instead of making smart investments. We built big suburbs instead of factories that made things. We made complicated financial derivatives instead of strong energy infrastructure. Now it's time to pay the bill. The WF didn't come up with the Great Reset as a secret plan. It's the market's harsh way of fixing imbalances that have built up over the past 50 years. The pendulum is swinging quickly from west to east, from financial abstractions to real assets, and from debt to equity. The average American is still not ready for this huge change. They still use mental maps from the 1990s. They think that inflation won't last long. They think that the dollar can't be broken or touched. They're standing right on the tracks, staring at the light of a train coming toward them, thinking it's the sunrise. It's not morning. The Petrodollar Express is coming straight at them. We'll talk about the investment shield strategy in the next part. Where can you hide your money if the dollar is really losing its reserve status and inflation is coming home to roost? We'll look at the specific asset classes, energy, gold, and defense that are helped by a multipolar world and the reindustrialization of the United States. The end of the petrodollar isn't just a move in a game of chess on some abstract board. It's a clear sign that the easy mode of investing in the U.S. is over. For 40 years, a huge invisible force pushed U.S. financial markets up. Foreign countries had to save dollars to buy oil, which meant they had to also recycle those dollars into U.S. assets. This made U.S. Treasury bonds and, by extension, it was technology stocks a permanent buyer who didn't care about price. It kept our interest rates low and pushed our price-to-earnings ratios up to levels that didn't make sense. This was the outrageous privilege at work. The Saudis and Chinese have built a bypass highway around the dollar system, and that tailwind is quickly turning into a strong headwind. The Pax Americana discount is no longer available. The multipolar risk premium is now at our door. You need to change your investment portfolio from abstract financial ideas to real-world things. If you want to make it in this new financial system, you need to own the things that can't be made out of thin air, and the things that are absolutely necessary in a world that is becoming more violent. 1. The energy renaissance. Revenge of the old economy. The energy sector is the most obvious winner from the petrodollar's fall. If the dollar loses its status as a reserve currency, it will lose value. This will cause the price of commodities, which are priced in dollars, to go up. But the positive case for energy goes much deeper than just the devaluation of currency. We're about to enter a time of harsh energy realism. The ESG, environmental, social, and governance movement, which has kept oil and gas companies from getting money for the past 10 years, is now running into the harsh realities of AI development and geopolitics. AI data centers suck up all the energy they can. They need baseload power all the time, which wind and solar alone can't provide. At the same time, reshoring efforts are completely rebuilding the U.S. industrial base, which uses a lot of energy. This makes a supercycle for both nuclear energy and hydrocarbons. You want to own the companies that make things, the ones that have reserves that last a long time and are in politically stable areas. You want to own the infrastructure like the LNG terminals and pipelines. As Europe and Asia fight to find energy sources outside of the Russia-China axis, the U.S. LNG turns into a strategic weapon in international politics. And most importantly, you need to own uranium. Nuclear energy is the only realistic way to power the AI revolution without breaking carbon emission goals. The sovereign AI race is really a race to control uranium. 2. The kinetic hedge, the defense industrial base. The U.S. was the main support for the petrodollar system, the Navy's ability to protect shipping lanes and trade routes around the world. As the world breaks up into competing trading blocks, like in bridge and the dollar, the chance of military conflict goes up a lot. We are moving away from a global economy that works on a just-in-time basis and toward one that works on a just-in-case basis. It is expected that global defense spending will reach more than $2.60 trillion by 2026. Every country is actively getting more weapons. Germany is starting over with its military. Japan is giving up decades of being peaceful. The U.S. is restocking its military supplies that were used up in proxy wars. This isn't a short-term rise in spending. This is a long-term, non-religious trend. Defense stocks are no longer just safe investments. Now they're about growth. But don't just look at the companies that make bombs the old-fashioned way. Take a close look at the defense technology industry, which includes companies that make self-driving drones, cyber defense systems, and intelligence platforms that work in space. In a world with many poles, national security is the same as data sovereignty. The companies that protect data infrastructure are just as important as the ones that make the missiles. 3. Gold and outside money. The ultimate reserve. We've talked about gold before, but its role changes completely now that the petrodollar is dead. It's not just a way to protect against inflation anymore, it's a way to stay out of politics. What else is left if a central bank can't trust the dollar because of sanctions that make it a weapon, and it can't trust the yuan because of capital controls? Gold. It's the only type of money that isn't also a debt for someone else. In 2025, central banks bought more than 800 tons of gold, and the rate of buying is speeding up in 2026. They're making their choice with their money. This means that individual investors must always have some physical gold or trusted proxies in their portfolios. It's the only type of asset that really does well in a world where there is no trust. In this case, we're also seeing Bitcoin become known as digital gold. In Bridge is the digital payment rail for countries, while Bitcoin is the digital payment rail for people and organizations that want to completely avoid state-controlled systems. Bitcoin's value is a borderless, unseizable asset will rise sharply as capital controls become stricter, which they will have to do to keep dollars in the U.S. 4. The reshoring businessmen. The death of the petrodollar is actually good for U.S. manufacturing, which is strange. The petrodollar system kept the dollar strong, which made U.S. exports too expensive and U.S. workers uncompetitive around the world. It completely hollowed out the Rust Belt. When the dollar gets weaker and loses its fake premium, American workers can compete with workers from other countries again. Along with the geopolitical need to bring supply chains back home to avoid being dependent on China, there is a huge boom in capital spending all over the United States. We're building plants to make chips in Arizona, batteries in Georgia, and drugs in North Carolina. The factory owners themselves may not be the best investment opportunity here. Instead, it's the robotics and automation technology companies that help with reindustrialization. We can't afford to hire enough cheap workers to run these new factories, so we have to automate them a lot. The new tech stocks are companies that make industrial robots and systems for automating warehouses. Construction and engineering companies are the ones that actually build these gigafactories. Logistics networks are the rail and trucking systems that move raw materials around the North American trading bloc. In the petrodollar world, we exported paper promises and imported real goods. It was a world of financial engineering. In the world after the petrodollar, we have to make what we use at home, which is a real engineering challenge. The change will be very hard. Inflation will stay high for a longer time. Interest rates will stay high and hard to change. But for the investor who sees this change coming and makes the right moves, it is the best investment opportunity of a lifetime. You're selling the assets of an empire that is falling apart, like long-term treasury bonds and consumer discretionary stocks. You're buying the assets of an empire that is rebuilding, like energy, gold, industry, and defense. The deal made in 1974 by handshake has been broken. The Enbridge digital ledger is now up and running. The world has changed in a big way. Have you?